Now, the highly anticipated halving event is just a week away. And of course, as we discussed earlier, opinions are pretty split on what sort of price action fireworks to expect in the post-halving time period. What sort of time frame to expect them on, right? The daily, the weekly, is it going to crash immediately, right? Going to crash, not immediately. Now, on Friday, we talked about the latest Grayscale report and how they coined the term quantitative hardening to describe the fundamental event that the block reward halving represents to Bitcoin's underlying scarcity and inflationary narrative, right? And of course, this is occurring during a time when central banks around the world are firmly gripped in quantitative easing programs, right? Injecting money into the monetary system, right? Inflating the monetary system, i.e. inflation. In a way, Bitcoin expresses its own monetary policy through the halving event, right? Again, remember, Bitcoin is a deflationary currency, and it expresses its monetary policy through the halving. And it couldn't have arrived at arguably a better time, right? Because this is the backdrop of an imploding financial system, right? And this backdrop of an imploding financial system is pretty effective at drawing in new investors and people interested in an alternative to the financial status quo. Again, what is the big thing that people are just wondering right now? Like, regular people are like, what do I do with my money, right? I talk to so many people every single day that just want to know, like, look, I've got money in stocks, I've got my 401k, what do I do with it? I'm afraid, right? And just like how the events of 2008 inspired the creation and launch of the Bitcoin protocol in the first place by 2010, a decade later, we are faced with a crisis which highlights the ineffectiveness of our leaders at managing economic policy, inadvertently making a case for alternatives like Bitcoin for anyone who is paying attention and looking for an exit out of a quickly crumbling financial system. Now, again, just to cover the basics here, of course, every 4 years, Bitcoin comes calling with a reminder that its monetary policy is set in stone. Many are attracted to the subsequent weeks, months, and years to Bitcoin to follow the halving event, right? Where the hash rate, difficulty, and most of all, the price per coin climbs many times over as the leading cryptocurrency Bitcoin generally defies naysayers time and time and time again. All right. Now, this is a sort of supply shock, right? Supply shock anticipation as a result of the halving, right? As this occurs, word begins to spread and the hype begins to build every 4 years in the crypto space, leading to usually bullish run-ups prior to the event. And looking back at the past week of Bitcoin's price action, that certainly has been the case, right? We've seen a very impressive run-up. This is the 7th week of consistent gains, as I said earlier. But following the halving, price remains pretty volatile and even generally sees big retracements to test earlier support. Thus, again, another fundamental feather in the cap of my short trade. Before we get that bull market rally, you guys know what I'm talking about. Like, there's rallies and then there's rallies. You know what I'm saying? Sorry. All right. Sometimes you just got to be real with it. Okay. That takes us to new all-time highs. Right. Now, this at least has been how it has played out over the course of the previous two halvings. Bitcoin, if we look at prior halvings, right? Generally, pre and post halvings, we see Bitcoin getting sold into pretty hard. That's generally been the rule, not the exception, right? If you look at November 28th, 2012 and July 9th, 2016, right? That offers a pretty good picture of what to expect next week, right? Immediately following the halving, we see a shakeup in hash rate, followed by appropriate difficulty adjustments to the network, as miners currently mining around break even are affected the most, right, which we covered before, this catalyzing capitulation of miners, and may be forced to exit. Right? What follows is another cycle of miner capitulation as those participants left operating in a post-halving environment make do with a smaller reward pool before price begins to appreciate again. And miners are reintroduced and difficulty adjustments continue and readjust the difficulty of the network so the miners that were originally kicked out or catalyzed can come back into the system. And of course, this sets up, as I talked about, that kind of environment where larger mining operations that are profitable might actually decrease the sell flow for Bitcoin even more post-halving, a week or two, after difficulty adjusts, because they speculate, right? And they speculate the price will go up. This is what's happened significantly every previous halving, the past two halvings. And if they don't really need to sell a whole lot of excess Bitcoin because they're already mining profitably, they are incentivized to just hold on to their Bitcoins for higher prices to yield higher profits, right? According to Token Daily, they say that Bitcoin's price, is not going to move up significantly until mid-2021. All right. Now, this table, these two tables, show the price change of Bitcoin in the months following the halving. They note that price makes significant changes about 6 months after the halving, and the maximum change is 12 months post-halving. Hence, hodling until May 2021 would provide the highest ROI. This is very similar to what I said last week, I think it was, or last week or 2 weeks ago, where I said that accumulating long-term positions designed to be held for over a year have a high likelihood, have a high statistical probability of being profitable. You guys can check this out. This is on AMB Crypto. I'll post the link in the chat right here if you guys want to take a look.